Right now in the United States, the country where Apple was born and built its brand, something unusual is happening. iPhone sales are weakening at the same time Samsung's growth is accelerating. According to market research firm Canalys, Apple's iPhone shipments in the US dropped by about 11% in the second quarter of 2025 compared with the same quarter a year earlier. That translated to roughly 13.3 million iPhones sold, down from around 14.9 million a year ago. At the same time, Samsung's shipments jumped 38% to about 8.3 million units. Samsung's share of the US market rose from 23% to 31%, narrowing the gap with Apple's 49% share. These numbers might seem technical at first glance, but they matter for real families. Smartphones aren't just gadgets anymore. They're tools for work, school, banking, and communication. When a shift this large happens in the world's most mature smartphone market, it means Americans are making different choices about where they spend their money. That affects household budgets, carrier plans, and even which apps or accessories people invest in. A family that upgrades a phone every 2 to 3 years is now thinking more about value, features, and long-term utility than brand loyalty. Economically, this shift reflects broader consumer caution. The overall U.S. smartphone market barely grew during this period, only about 1% year over year, even though Samsung and a few others posted strong gains. That suggests demand overall isn't exploding. Rather, the way that demand is distributed is changing. Samsung is picking up buyers that previously might have defaulted to a new iPhone. What's particularly noteworthy is that Apple still leads in total unit sales, but the margin is shrinking faster than it has in years. After dominating the US market for over a decade, Apple is seeing its domestic advantage erode. From a consumer standpoint, this signals a shift in perception about what constitutes a better phone, not just in technical specs or price, but in how people feel about the products they're buying. And when sentiment changes among American buyers, especially in a context of inflationary pressures and tighter household budgets, big tech companies can feel the effects very quickly. People aren't leaving the iPhone because it's bad, they're leaving because they're bored. One of the most misunderstood shifts in the US smartphone market isn't about quality, it's about stagnation. Apple's iPhone remains an excellent device. In fact, recent reviews still praise the iPhone 17 series for improvements in display quality, camera performance, and overall speed. But excellent isn't the same as exciting, and that distinction is increasingly shaping consumer behavior. In the second quarter of 2025, Apple's share of the US smartphone market dropped from 56% to 49%, a meaningful erosion for a company used to dominating well above half the market. At the same time, Samsung's share jumped from 23% to 31%. This is one of the largest single-quarter market share shifts in recent memory, and it is not driven by an inferior iPhone, but by consumers craving newness. To understand why this matters, put yourself in the shoes of an average American family. The cost of living has climbed steadily through 2024 and 2025, with inflation still pressuring household budgets. When a family considers a phone upgrade every 2 to 3 years, they weigh value heavily. Paying top dollar for a new iPhone that looks and feels familiar year after year starts to feel less like an investment and more like a habit that no longer delivers surprise or delight. Add in the reality that premium smartphone prices regularly exceed $1,000, and the pressure on upgrade motivation becomes clearer. Samsung's recent strategy, offering a wider variety of designs and innovation in form factors, aligns with this shift in mindset. Foldable models like the Galaxy Z Fold 7 and Z Flip aren't just another rectangle with incremental improvements. They represent a different way to use a phone, screens that unfold into tablet-sized surfaces, new experiences with multitasking and media, and form factors that spark conversation on social media all tap into a sense of novelty. That's not a trivial driver in today's market. For many buyers, the emotion of excitement influences purchase decisions nearly as much as specifications. This trend isn't about Apple failing technically or Samsung suddenly becoming superior in every category. iPhone still delivers strong performance, reliable ecosystems, and long-term software support. But when two premium phones cost a similar amount and one offers a new way to feel your tech, people start to ask themselves, is this year's iPhone meaningfully different from the one I already have? That question, more than any single spec sheet, is part of why longtime iPhone owners are now reconsidering their loyalty. Stay ready for what this shift means, not just for tech enthusiasts, but for everyday American families deciding how to spend their hard-earned dollars. When incremental upgrades no longer justify premium prices, even minor shifts in perceived novelty can ripple into meaningful changes in market share. And we're already seeing that play out. For the first time, Apple is losing ground in its own backyard. For decades, Apple's dominance in the United States was a given. The iPhone wasn't just a phone, it was a cultural symbol, a status badge, and the go-to choice for millions of American consumers. But that narrative is quietly shifting. In the second quarter of 2025, Apple's iPhone shipments in the US fell by about 11% from 14.9 million units to 13.3 million units compared with the same period a year earlier. Samsung, in contrast, saw its U.S. shipments surge by 38% to roughly 8.3 million units. That pushed Samsung's market share up from 23% to 31%, narrowing the gap with Apple's 49% share. What makes this shift significant isn't just the raw numbers, it's where it's happening. This is Apple's home market. Historically, Apple has enjoyed a strong lead here, often capturing more than half of all smartphone sales. But analysts note that this gap has shrunk dramatically from a roughly 33 percentage point lead over Samsung a year ago to just 18 percentage points today. This matters for everyday American families because smartphone choice influences how people communicate, work, and spend their money. Smartphones are one of the biggest technology purchases most households make outside of computers and TVs. When more Americans start opting for Samsung over Apple, it signals a deeper shift in consumer priorities, from brand loyalty to perceived value and innovation. It's not just a preference for a different logo, it's a shift in what people believe will improve their daily lives. The rising popularity of Samsung's mid-range models like the Galaxy A series, which offer compelling performance at lower price points than many iPhones, reflects this trend. Economically, the US smartphone market itself has shown weak overall growth, barely rising year over year. That means Samsung's gains aren't coming from explosive demand, they're coming largely at Apple's expense. When total market shipments rise only slightly and one player grows sharply while another shrinks, it's a direct transfer of share, not new demand. From a broader perspective, this shift is emblematic of a mature market where upgrade cycles have lengthened and consumer excitement has plateaued. Apple still sells millions of iPhones, and dominance isn't disappearing overnight. But the momentum is changing. That dynamic has implications far beyond the phone aisle. It influences carrier promotions, accessory markets, software ecosystems, and even investor expectations about future growth. In a market where change used to be incremental, this slide in domestic dominance points to a potential turning point in how Americans think about their smartphones. Wall Street doesn't evaluate tech companies based purely on the number of units sold. Investors pay attention to growth trends and future potential. Apple's raw sales figures remain large. Tens of millions of iPhones sold each quarter, strong revenue, and a massive global install base. But the fact that shipments are declining in the US, Apple's most profitable and historically strongest market, signals a change in consumer behavior. Simply put, investors are worrying not because Apple is failing today, but because tomorrow's growth story looks less clear. This concern is echoed in how Apple is carving out its future pathway. The company's strategy, sometimes described by analysts as a wait and perfect approach, means Apple often enters new tech segments only after standards are set. That worked historically with products like the iPod, iPhone, and iPad, which weren't first to market but became dominant once Apple refined the concept. Today, however, the dynamics are different. Innovation cycles are faster, and customers expect frequent, visible leaps rather than incremental refinements. For average American consumers, this has a practical impact. When upgrade cycles stretch longer, which they have as phones become technologically mature and expensive, families begin to treat annual smartphone purchases like major budgets rather than routine expenses. When an iPhone upgrade doesn't feel significantly better than the model you already have, Whether that's in camera, display, software, or form factor, many decide to wait. And when rivals offer tangible differences, like Samsung's foldable screens, consumers begin to reevaluate where their money delivers the most felt value. To be clear, Apple isn't failing. It still leads in total shipments in the US, and global projections show Apple possibly overtaking Samsung in worldwide shipments in 2025 thanks to the iPhone 17 series. However, share shifts in the US are meaningful because this market yields high average selling prices and strong service revenues. A slow erosion at home impacts pricing power, ecosystem momentum, and long-term financial projections, all things that influence stock valuations and investor confidence. So the key question investors are wrestling with isn't whether Apple can sell iPhones. It's whether current sales momentum is sustainable when competition offers more perceived innovation, more variety, and more reasons to switch. What if Apple's biggest strength has quietly become its biggest weakness? Apple's greatest strength for years has been consistency. Its products fit into a seamless ecosystem that millions of Americans rely on every day, from iMessage and FaceTime to continuity between iPhones, iPads, Macs, and Apple Watches. That integration is why so many users have stuck with the iPhone for years. But right now, that comfort and familiarity may be limiting Apple's appeal in a market that increasingly rewards visible change and novel experiences. On the hardware side, Apple's strategy has been evolutionary rather than revolutionary. The iPhone 17 series, released in 2025, was widely praised for solid improvements like an expanded promotion display across all models and stronger camera capabilities. But these moves were expected, not exciting. Some reviewers explicitly noted that while Apple made important upgrades, the company still needs to keep buffing up the base model with truly innovative features so that buyers feel motivated to upgrade their current phones. Contrast that with Samsung's more visibly different lineup. Products like the Galaxy Z Fold series and even the newly emerging Galaxy Z Trifold range push consumers into new usage patterns, multitasking with tablet-like screens, using foldables for productivity, and simply having devices that look and feel different at first glance. Samsung's foldable innovations aren't perfect yet, but they're different enough to prompt reconsideration from buyers tired of devices that look fundamentally the same year after year. Apple's ecosystem strength now plays into a subtle challenge. Familiarity can reduce the emotional incentive to upgrade. When a new phone looks and feels nearly identical to one you already own, even if performance is stronger, the perceived value proposition weakens. Across the broader smartphone industry, we are seeing stagnant upgrade cycles and slowing replacement demand because consumers simply don't feel there's enough new to justify spending $800 to $1,599 or more on a device they already understand. While Apple still commands a substantial share of the US market, historically above 50%, recent quarterly trends show that Samsung's share has grown rapidly, narrowing that lead. In Q2 2025, Samsung's market share in the US rose from about 23% to 31% year over year, while Apple's share fell from around 56% to 49%. That dynamic is not just about numbers. It reflects a momentum shift in how consumers think about smartphone value and choice in a mature, saturated market. Economic pressure on American households, with inflation and cost of living still elevated, compounds this effect. Buying a new phone that feels incrementally different is harder to justify when budgets are stretched. In this environment, consumers naturally gravitate toward options that feel like real upgrades, not just changes in name or slight spec boosts. Apple's ecosystem continues to be a competitive advantage, but in the context of consumer psychology, where novelty, perceived functionality, and visible innovation matter, that strength now carries a trade-off. The comfort of familiarity can dull excitement, weaken upgrade incentives, and open the door for competitors offering something that feels new. Whether Apple can turn this moment around with new devices, deeper AI integration, or a revised hardware paradigm remains one of the most important questions in tech for 2026 and beyond. Are these smartphones fairly priced? In the smartphone market, one question is asked repeatedly, a question that is often overlooked, yet can completely change the final decision. Is this device truly worth the price being paid for it? When the name iPhone is mentioned, high prices immediately come to mind. On the other side stands Samsung, offering a wide range of models and features. However, the real issue is not which brand is superior overall. The real question is, which brand follows a more rational pricing strategy and which one offers greater real-world value? iPhone, paying for stability and experience. The iPhone is a product built around a clear philosophy: simplicity, stability, and integration. Apple focuses on delivering a seamless user experience through tight hardware-software optimization and long-term support. Even after several years, iOS continues to perform smoothly and reliably. Extended software updates, strong security, and Apple's cohesive ecosystem remains some of the brand's strongest advantages. That said, in many hardware-related metrics, the iPhone does not clearly outperform its competitors relative to its price. Charging speed, customization options, and certain features offered by rivals remain limited. As a result, iPhone pricing cannot be described as economically aggressive. However, it can be considered defensible, provided the user prioritizes long-term reliability, consistency, and integration within Apple's ecosystem. Samsung, emphasis on value for money. Samsung follows a fundamentally different approach. The brand aims to deliver the maximum number of features at every price point: high-quality displays, faster charging, extensive model diversity, and the flexibility of Android make Samsung an appealing option in terms of value. Although some models experience noticeable depreciation and software consistency is not always uniform across all tiers, Samsung generally provides more tangible features relative to the price paid. From this perspective, Samsung can be said to follow a more rational pricing strategy in most cases. Final conclusion: an informed choice. The conclusion is clear. If the user's priority is long-term stability, security, and a simple, low-risk experience, the iPhone remains a suitable choice despite its higher price. However, if the primary goal is maximizing features relative to cost, with greater flexibility and broader options, Samsung delivers a stronger value proposition. Ultimately, choosing between iPhone and Samsung is a choice between a stable experience and economic rationality. Where Apple and Samsung stand today and what it means for you. As we've seen throughout this story, the dynamic between Apple and Samsung in the US smartphone market is changing in a real and measurable way. Apple still sells millions of iPhones every quarter, and its ecosystem remains one of the most powerful consumer platforms in the world. But the trend lines matter just as much as the raw numbers. In the second quarter of 2025, Apple's US market share declined from about 56% to roughly 49%, while Samsung's jumped from 23% to around 31%. That marks the closest gap between them in more than a decade. So why does this shift matter for the average American family? Smartphone purchasing isn't a casual choice anymore. It's a budget decision. When premium devices regularly cost over $800 and sometimes $1,500, families weigh value more than ever. If a new phone doesn't feel significantly different from the one you already own, it becomes harder to justify spending your money on it. Samsung's strategy, offering a wider range of devices from mid-range Galaxy A models to ambitious foldables like the Z Fold and Z Flip, has tapped into this psychology. Consumers feel like they're getting something new rather than just an incremental update.